Thanks, Ashley. What a great introduction. So I did work for the ATO, so please no one hold that against me. Now let's just come here and share the screen. Looked easier when you did it, Ash. Here we go. Yep, we're all good. So as per the screen here, my name's Tony Brindley. Phone number's there, 0409 117 079, and the email address. So Business Connect is a New South Wales funded program. It's free business advice that you can connect with an advisor such as myself. So I cover the area from Woolgoolga down to Laurelton, and Business Connect is all about supporting businesses to start, run and grow and adapt to the new changing world. So we had bushfires last year, COVID this year, and who knows what's going to happen next year. So it's about all those sorts of things. The program's free. If you want some more information, we've had some technical issues. There we go. So there's all about me on the Business Connect website. So you can register directly with Business Connect, or you can send me a text message on the phone, you can send me an email, or you can phone me and I'll talk you through the registration process. There's a bit of blurb about me. So I help with a whole range of things. I'm a retired accountant, CPA, worked in the tax office, assisted over 1,200 businesses in Northern New South Wales with introduction into GST and pay-as-you-go when the new tax system came in. So lots of experience across a whole range of industries, worked in public practice as an accountant as well, run my own small businesses, won an award as an innovator, as a highly commended award in the New South Wales Small Business Awards previously. So whether it's something to do with your cash flow, business plans, sales, marketing, selling online, e-commerce, then I can put all those things together and give you a little bit of direction. So what is cash flow? So cash flow measures the net amount of money. Now this used to be called this funny thing called cash. And I actually have here somewhere a $50 note. So this hasn't seen the light of day since March. So I was in the wallet. There's also another one there as well. It's just funny how we've moved from cash to a cashless society in the main for a lot of people. So maybe in the future, we won't be calling it cash flow. We might be calling it plastic cash flow for debit cards and credit cards. That might be the new way of the future. So when more money comes in than goes out, we call this a positive cash flow. But when more money goes out than comes in, we call this negative cash flow. It's okay to have a negative cash flow, but you don't want it all the time, and you've got to have reserves available to meet the expenses when that cash flow is negative. So cash flow can be described a bit like the tide. It ebbs and flows on a daily, weekly, monthly, and even a yearly basis. So if you're in a situation where your cash flow is negative, and it's been negative for a while, and you actually have to do something about it, then my personal belief is you want to try and get to a neutral cash flow or a break-even cash flow position as soon as you can. Don't try and strive for a positive situation because the distance is so large. So if you just go to neutral, you get here, and what does that do? It gives you breathing space, gives you that opportunity to take a breath, think about what you're going to do, how you're going to do it, and then once you put a few things into place, tweak it a bit further, and you can move into the positive cash flow way. So that's my approach with these. So managing your cash flow. Yeah, I will work this out. No, I won't. Ashley? So, okay, so here we go. Back at, no. It stopped. So we're back after this commercial break from our sponsors, 6 Degrees. 6 Degrees is a great, wonderful program. And I've been working with 6 Degrees for the last 18 months and lots of fun. Okay, one more to go. Okay, managing your cash flow. So there's several things here to take into account. So the timing of cash flow and the impact on your bank balance. If you've got large commitments that have to go out at the beginning of the month and you're selling things on credit, then the credit money is not going to come into later in the month. So you've got to make sure you've got money up front in a bank account, stashed under the bed or wherever, or you've got an overdraft or something that you can use until that money comes in. So timing is very, very important. Profit and cash flow are two different concepts. So with profit, we're measuring simply the revenue less our expenses, and we treat our net profit and that becomes taxable. Whereas with cash flow, it's all the things that come in. So that can be money from sales, it can be loans from the bank, it can be money you borrowed on your credit card, it can be money that you've inherited, it can be money that you've got as some of the grants that are available. So two different concepts, and you really got to keep that in mind. Now, there's also a principle, particularly with taxation and GST. So there will be cash that you're going to collect that is not yours. And it's very important to monitor that because you do have legal obligations to account for that and to pay for that money. So this is what I'm talking about is GST. If you're registered, if you have employees, you're going to have pay-as-you-go withholding, and you need to put money aside for that. You'll also need to put money aside for superannuation and so forth. So I'll talk a little bit about a few things that you can do in managing that as well. So working capital management is simply having enough money available to meet those outgoings, supplemented by the incomings that you've got. And then hopefully there's a surplus left over, which takes you through to the next month. If your business is growing, you're going to have to fund that. Now, if you've got really good profit margins, you might be able to fund that from your profit margins or from your business. Otherwise, you may need to take in an equity investor, borrow some money from the bank if they'll lend it to you. They always seem to want to give you money when you don't want it, but never want to give it to you when you need it. That's been my experience over quite a number of years. Now, you're going to have some regular financial commitments and you need to plan for these. So what business activities trigger obligations? So GST, BAS. So BAS is a big obligation. It's an important date. So it's usually the 28th day after the end of a quarter if you don't use an accountant. So you've got the 28th of July, 28th of October, 28th of April. But for December quarter, you get a 1 month extension, which is the 28th of February. So they're the important dates for you to do your pay-as-you-go withholding for wages, your GST if you are registered, and if you made a profit in the previous years, you may even have a pay-as-you-go installment rate to pay tax for the next year. So you need to take that into account. Now, what's the implications of not meeting these? Well, at the moment, there seems to be a lot of leeway around to help people meet their commitments. The government is aware that a lot of people can't. Some lenders, though, they're not as forgiving. I have some clients that repossession activity has started, and we've helped get some of their equipment back. So it's a whole new world. It's a whole new way of doing business, but there are consequences. Worst case scenario is you can be sold up, go into bankruptcy. If you have a house, you could lose that. So cash flow is very, very important. It's the lifeblood of your business. You need to really monitor it very closely so you don't end up in a very adverse situation, because the more adverse it becomes, the more difficult it is to manage. Okay, so regular commitments include loans. Now, they could be personal loans, business loans, house loans. So your house loan has to be paid for money that's going to come out of your business, unless you've got a partner who's working and perhaps they meet that commitment. Credit cards, you need to meet those. Rent is a regular commitment you need to pay. Wages for permanent staff, different types of insurances, you need that to cover yourself. GST, pay-as-you-go withholding, pay-as-you-go installments are all cash outflows. They are reported on your BAS. It's very important, if you can't pay the amount to the ATO at the due date, is to lodge your BAS and contact the ATO preferably before the due date and discuss a repayment plan. And this is kind of like building a credit rating. So I know some clients over a number of years, at a particular time during the cycle of a year, it's always tough, and they enter into a payment arrangement. Tax office goes back, has a look at what they've done previously, knows they're going to get paid, and they will help them through that. So this is a really great deferral technique that you can use. Now, If you can't afford to pay, you don't have cash reserves, then you've really got to review your business, what you're doing, your business plan, your whole proposition, whether you need to pivot into something else, and for heaven's sake, renegotiate the terms the best you can with the different providers that you're working with. Okay, so tracking your performance. This is what is the mainstay of cash flow. So review your business regularly. Now, as I said before, we've had bushfires last year, we've got COVID this year. We don't know if we're going to go into another COVID situation before a vaccine comes around. Hopefully we won't, but you need to monitor and review things to make sure you're in a good position to manage whatever situation develops. What to look for, we'll have a look at that on the next screen. Now, in the past, your past performance could be a really good indicator of what you're going to do in the future. So prior to the bushfires, December was often a great month for a lot of businesses. You'd actually make probably half your profit for the year. That would carry you through. February was usually always a terrible month. After Christmas, people paying money back on their credit cards, for example, kids going back to school, less disposable money floating around. Now, I don't know what's going to happen this Christmas. Those particular months may still be the same, but a guarantee of a great month last year is not necessarily a guarantee of a great month this year. Okay, so what to look for? Key performance indicators are often called KPIs. So you can create your own KPIs that make sense for your business. Now, one of my favorite ones is to break up your sales into transactions. So if you're in a retail business, you can take the total number of sales transactions for the day, the week, the month, and we're looking at the average dollar value for all of those transactions. If you have a POS system, point of sale, then that system will provide you with this on a daily, weekly, monthly, yearly basis. So here's an example here. So if, for example, we've got 10 transactions a day and they average $100 as a sale, then that equals $1,000 for the day. And if we trade for 7 days a week, that's $7,000. I'm just using numbers that I can easily manipulate if I need to. So if you're short of cash, so negative cash flow, by $700 a week, how do we fix this problem? Okay. So what I say is it's harder to find $700 if you don't have it, but it's easier to find smaller amounts. So one of the things you can do by using this approach is you only need one extra average sale a day of $100, and you do that 7 days in a row, all of a sudden at the end of the week, you've got $700. Okay, so people say, well, that's easier said than done, but it isn't really, okay? So you can incentivize your staff to make that one extra sale a day. And one of the interesting things is if you put on like junior staff, then I have a fair bet that most of you haven't fully trained that person into sales. So they're doing the best that they can, but they haven't been given all the techniques and the training to be a great salesperson and even a better asset to your business. So put some effort into training them and watch the results that can follow. Another way to increase your sales is if you have a website, improve your SEO, do some social media exposure in different platforms. So there's been other presenters in the course of this Small Business Month series of presentations that are happening. All of those things come into your cash flow. So improve your SEO, money comes in, more customers, more transactions, okay? More money in your pocket, more plastic $50 notes that you end up with. And there's lots of other things that we can do KPIs on. We can do them on things like the number of staff to the dollar turnover value for the day. All right, so if you need some help on that, by all means, give me a call and we'll talk you through that. With cash flow, there are things called change levers. Now, these are the things that you can actually change yourself and make a big impact on your business. Now, these are the things that will end up on your spreadsheet. So this is what can happen to make your spreadsheet look better than what it is. So the change levers here that we're going to talk about are, so the cash that comes in, we can change our pricing. We can look at increasing the volume of our sales, and we can also look at managing our debtors better. Now, money that goes out are things on assets, our expenses, inventory, and staffing. So if we can control that sort of mix, we can also reduce our costs, which reduces our money going out. So the first one's the pricing lever. I just need to have a drink, excuse me. So one of the things you can do is change prices. You can put your price up. You do need to understand what your profit margin is. Now you might say, I can't put my prices up anymore, Tony. They're at the maximum of where they are. And that might be very well and true. So then you have to find another way to do it. And so some of those other ways could be bundling some products up with another product. So in some retail apparel shops, you will see buy one, get 50% off the next one. So they're getting the full price value on the first piece of apparel. And if they've got 100% markup, so it cost them $50, they marked it up 100%, goes to $100, and they're giving 50% away off the $100, it takes them back to their cost. So they're only giving away nothing other than their opportunity to make a profit on that second item. But hey, if that increases your average sale for the day, that extra $100, then you're going in the right direction. So it's just a different way of looking at things. There's lots of different ways that you can change your revenue stream. Now, focus on your most profitable customers. Not every customer is an A-grade customer. So you can grade customers into A, B, and C. I personally don't like that sort of allocation, but the reality is some customers you can spend a little bit more time with and they will buy. You've got customers who'll come in you can spend all day with and they walk out buying nothing. So you've invested all that time and energy into no result. So choose the customers, be polite to all of them. A bad experience, I'll tell 10 people. A good experience, I'll tell 1 or 2. So bad news travels very, very fast. Increase the value of what you deliver. Solve a problem for someone. So for example, instead of say selling shoes, pair of men's brown shoes, size 8, leather upper sole. I mean, that's as boring as whatever, okay? So maybe you would change your messaging to something like, do you have sore feet? Oh, yes, I do. Would you like to have your feet being comfortable all day? Oh, yes, I love that. It's heaven on a stick. And then you come in with a leading to get them to come into the shop. So one of the tricks with selling is 3 yeses in a row creates a positive experience in the buyer's mind and can help you lead to a sale. So with a pair of just brown men's shoes, size 8 leather uppers, that really doesn't cut it for me. It's not enough. But sore feet, I want comfortable feet. Yep, I'm in. I'm willing now to have a look at that. So that's one of the things you can do. It's got nothing to do with pricing, but it's got something to do with increase the value to your customer. The next change lever we can look at is volume. So you can increase the number of potential customers. So when I said before with that KPI of $100 per transaction, if we can get one more transaction, then that results in a new customer, another customer, someone else to market to. One of the things you can do is to collect people's email addresses. Even if you have a physical shop, whether you're a wholesale, doesn't matter what business you're in, then you've got something you can market promotions to. I was in town here the other week and I bought something from a store and they go, can we get your email address? And I say, why? Oh, so we can send you some stuff. And I go, no, I'm not interested. But they got my phone number. So every week on a Tuesday, I get this text, so much off, new things. I won't say who the store is, but that's a marketing campaign. So that's one way to increase your customers. You need to start looking at all of these things. One of the things you can do when you've got a newsletter, if you're any good at writing, you've got a great deal of knowledge about the products and the service and the business that you're in. So why don't you write a lead magnet article? It can be 1 or 2 pages with some really succinct points, hit home, and they get that when they sign up. And it's just a way of engaging with the customer and say, great, you know, he knows what or she knows what they're talking about. I really like that. I'm going to go in and have a look at that stuff. And if you're really good and you're really clever, then you may look at writing a full-blown book as an ebook, and you can then have that for sale on your website. Personally, I've just written a new ebook on growing zygo cactus. It's been out for 3 months now. I sell it exclusively on my own website. It's doing quite well, and it brings its own customer traffic to my store. So don't overlook some of these new digital products. You wake up in the morning, emails have come in, money's already in the PayPal account, don't have to do anything. Occasionally you'll get some little old lady who has opened it, didn't know where it's gone, can't find it anymore, and you've got to resend the email. But it's a pretty good process to go. Increase the range of your products and services is another way to increase volume. So if we're selling shoes, well, why don't we sell socks? If you're not selling socks and you're selling shoes, to me, the two go together. You can even then use the socks as a loss leader to help convert the sale. So if you buy the shoes, look, we're throwing in 1 or 2 pair of socks. Okay, so just another way to get the sale. Selling to a new market or territory here, we're talking, it could be online. So if you don't have an online presence, it's one of those things you need to have a look at. Half the people who buy online will use a marketplace like Amazon, eBay, Etsy, etc. So if you're not on those sort of platforms, you're missing out on potentially half of the market for sales. So if you're struggling a little bit, look at ways to get in there. There's also some other news sources that I'm going to talk about at the end, which is relatively free and is something you can all do. And I've had some experience on that. We'll talk about that at the end. Increase your sale process is another way that you can do and can really lead to higher numbers of inquiries, which result in more sales. Debtors. Now, this is a really interesting one. For whatever reason, people hate collecting their own money. Happy to make the sale. Oh, I wish you would pay, but you won't ring him up. Okay. So don't be frightened of that. It's your money. Okay. You worked hard for that. You need it to pay the bills. Maybe your partner wants a new present or particular present. You haven't got enough money. Well, you know, you got all this money to come in, so you get on the phone. So you can also ask for progress payments depending on the sort of work that you do. If it's a bit harder in a retail store, but if you're in the service industry, you can certainly ask for progress payments. Automate your invoicing. As soon as the transaction is completed, have it go out. Don't wait for the end of the week, the end of the month to invoice out, because then it's another week or a month before the money will come in. So you're making things worse for yourself. Give them a call and always give them the option, be nice and pleasant. And if they say, look, I haven't got anything to give you, say, look, can you just give us $50 today? I'm a bit tight myself and $50 means a real difference to me. And then when they agree to that, then you say, well, okay, so the balance is 250. Do you think we can get some, can you make another part payment next week for me? And at least you're going to get some money back. People are more responsive if you're friendly. They're not so responsive when things have gone wrong. So just keep that in mind. Reduce your trading terms. Look, when I first started in business, I remember we bought Cyber's accounting software package, no longer around. It was just when PCs were coming out, worked really well. But on the invoicing, it had options for 30, 60, 90, and 120 days, which filled down the bottom of the invoice. And I thought, well, this is crazy. So anyway, you put it down and then people wouldn't pay 30 days. They wouldn't even pay 60 days. They're looking at 90 days and there's quite a lot that go, okay, I got 120 days. It says here that they're willing to extend it out to 120 days. So what did we do? We changed it. What did we go to? 7 days, 14 days, 21 days. When do people pay? 30 days, 90% paid in 30 days. It's a psychological thing. Have a look at what your invoicing terms are and enforce them in a friendly way, okay, if people aren't doing that. You can ask for early payment discounts if you can afford that. If that helps, that's great. If you sell to major chain stores, they all will force you to take a settlement discount for you to get paid regardless. So offer that, get the money in. Once you've got the money, you can then make some decisions in your own business. Okay. The assets lever, probably not as pertinent in today's climate because there's a lot of assets that are available for sale. But you may have some unutilized assets. You may have pivoted your business. You may have some shop fittings that you no longer need. You'll get something back rather than to throw them out. You may have a couple of computers. You may have downsized. So maybe, depending on how old the gear is, take a reasonable price and you've converted that to cash. If you've got like a typewriter, then you're really waiting for the next power outage for a few months before it's going to become into its own. Otherwise, you might as well get rid of it and use the space for something else. Use refinance as many things as you can. If things are really tight, your lenders will like to work with you. They still need you as a customer down the track. Sale and leaseback used to be really popular years ago. In today's climate, I'm not quite sure whether that's still going to have the same impact, but there certainly are things to look at. Excuse me. Okay, so the expenses lever. So these are actions to decrease discretionary spending. So there will be expenses that you've got in your business. So you may be subscribed to a golfing magazine, for example. It's in the business, shouldn't really be there, but you kind of like put it in there, claim it as a tax deduction, but it's costing you $250 a year. Well, maybe it's time to look at some of those things that you no longer actually need and cancel them. So on the weekend, I had a look at a couple of subscriptions that I haven't been using, and I went in to try and cancel them, and there's no cancel button. There is no cancel anything. So they just suck out $15 US a month. So now I'm going to have to write an email, and it'll be a convoluted process. But so be very careful when you sign up for things, how you get out of them, okay? But if you had 10 of those $15 or $20 Australian things, that's $200 a month. $200 a month is $2,400 a year. You can do something with $2,400 a year. It's not just $20 a month. It adds up, okay? And there's all the opportunities that you can use that extra money for. Other things that you can do is reduce your overheads, renegotiate your rent, renegotiate your insurance policies. So if you were in, say, a large shop, you moved into a smaller shop, then maybe you don't need plate glass insurance to the same level you had before because your shop frontage is shrunk. So you're paying for things that you no longer need. Go back and have a look at them. So they're the sort of things that you can do. Telephones, for example, and other utilities, power, gas, and so forth. Shop around, renegotiate. There's people out there who want your business and can provide a competitive service. And again, if you can save $10 a week, it's $120 a year. Well, there's part towards your coffee if you buy coffee every day, okay? So staffing, now this one's a really contentious sort of issue. You must remember this, that you need to create customers for other businesses around you. So if you cut back your staff, you're cutting back on customers elsewhere. If other businesses around you cut back their staff, they're cutting back customers for your business as well. But sometimes, you know, that's a situation that you're forced into. But do understand that as a mechanism. Change your staff mix. So maybe you need to look a little bit more casual at the moment if things are tight and your industry has changed rather than permanent. There are issues in putting permanent employees off. You need to work through those. Maybe you've got staff and they're underutilized. There are other things they could do. You might have someone, and I've seen this dozens and dozens of times, they've got young staff members who are really savvy with social media, and the store owner's saying, hey, come on, let's do a video clip. So it might be an apparel shop, for example. The young girls model the clothes, their mothers will come in, model the clothes, their girlfriends will come in, model the clothes, boyfriends will come in and model the clothes, put them out on social media. Use that time, the kids love it, okay? They actually know about all this stuff, whereas you're a little bit older in the tooth, you know, you might struggle with some of that. So utilize the staff a little bit better. It might well be that your trading hours have been reduced and you need to shrink your work resources back a little bit. So you talk to you and explain to your staff that you might need to cut back their hours, and then when things pick up that you can expand. So it's an engagement process. Keep your staff happy. Everybody likes to go to a workplace that they enjoy. They hate going to a workplace where they hate to turn up, and they'll just carry that through. So you need to look at the culture in your business. You need to make it as positive as you can. If you need to put more staff on, there's a cost with that. So if you're going to use an employment agency, then there was a cost that comes with that. Then you've got to train the staff before they can become productive. So that's your time that could be used better, and that'll be costs associated with the employment as well. So why go down that if you've got an employee who you can change the culture a little bit, motivate them, then that can be a cheaper alternative. And yet sometimes it can't. Inventory lever. Now, this is a great topic. If you're into retail wholesale and you've got stock, I pretty much guarantee that most of you have got too much stock, and you've got not enough of the right stock, and you got too much of the wrong stock. So there's a principle that you may have heard called the 80-20 rule, and it's not exactly 80% and 20%. It can be any combination that makes up to 100, but that kind of like is a bit of a myth, but there's a little bit of truth, I believe, to it. So 80% of your turnover is going to come from only 20% or thereabouts of your stock. And the other 80% of your stock is only going to give you 20% of your turnover. So what do we concentrate on? We concentrate on the 80% of stock that's only going to give us 20%. Isn't it better to concentrate on the 20% of our stock that gives us the 80% of our sales? So if you've got 10 items of, 100 different items in your store that are really slow selling, then maybe you only need to have 1 or 2 of them in stock. That gives you the variety for people to choose from. You know you're not going to sell it every day, and you know that you can reorder and replace it as it sells. That's a great way to utilize the stock that you've got on hand, turn it into cash to reinvest back in your business. You may even have stock that's really old and obsolete, may have been there from years ago. If you're in food, for example, there will be use-by dates, and they have to be met with legally. So there is a cost. So turn this stuff over, bundle it up, special it off, turn it into some money to buy some stock that hopefully will sell a lot quicker. Amend your ordering process. Now you can automate your purchase orders. Now, I just want to give you a real quick tale. Quite a number of years ago, one of the major supermarkets had an employee who was at the checkout, and they were scanning items. And in the warehouse, a pallet load of chewing gum turned up. And then the next week, another pallet load of chewing gum turned up. And then the week after, another pallet load of chewing gum turned up. Because it's an automated order, because the computer system is telling them, we've sold all this chewing gum. But they weren't selling any chewing gum at all. And now they've got like several pallet loads in the back dock of chewing gum when all the chewing gum is still sitting on the shelf. What happened? The staff member had a bracelet with the barcode of the chewing gum, and their friends were coming through and they were scanning the chewing gum and they were getting higher priced items. Okay, so automation does have some risks, but it's a great story, and it was in the newspaper. It's before social media, so maybe there's some truth to it. All right. Okay, getting towards the end of the presentation. So look, there's some tips here for additional revenue opportunities. So if you don't know about it and you're in the Coffs Harbour LGA or Clarence or Nambucca, Kempsey, Port Macquarie and further down the coast, then there's a new $10,000 New South Wales bushfire support grant available to you. It's for where your business has suffered due to the bushfires. It's not physical damage, it's if your turnover has fallen by 40% or more when the bushfires were on here in Coffs Harbour. So that's in November last year, November 19. So you compare a 3-month period with November in it, 2019, to the same 3-month period in the previous year in 2018. And if your sales have fallen, then you may find you're eligible for this grant. So it's available from Service New South Wales. You can phone them on 13 77 88. You can just simply type in New South Wales $10,000 bushfire support grant, and the application's online. It takes you only a few minutes to complete it all, apply online, and it's done. But please read the terms and conditions with that. Another thing to help you with money coming in, and again, this time it's from the Rural Assistance Authority as a New South Wales agency. There's an unsecured working capital loan of up to $50,000 for bushfire affected businesses. Now, again, it's not for fire damage to your business, but it's if your business was affected. So you've had cancellations, if you like, or an accommodation, for example, you're in retail and the customers didn't turn up and your turnover suffered. Then you can apply for this loan. It's probably 30 plus days to get approved. It's unsecured. There's no repayments for 2 years. Okay, you pay it back over 5. You pay it back, if it's a 5-year loan, you pay it back effectively in the 3rd, the 4th and the 5th year. And the best news is, how much is the interest rate? Would you believe less than 1%? So it's somewhere currently around 0.82, but less than 1%. So that is not a lot. had a number of clients that I put into this program along with the bushfire support grant. If you want help on these things, more than happy to help you. So some people go, I don't need 50. And I go, that's okay. But I could really do with 30. Then you put in an application for 30. I've had people, the smallest one that's gone in is like 12. And I've had others go all the way up and anything in between, right up to 50,000 with that. Okay, and it's made a really big difference to a number of businesses. Now there's a Facebook group that I came across a few weeks ago called Buy From a Bush Business. Now I don't know if you're aware from that, it's different to Buy From the Bush. This Facebook group has over 280,000 members. So I checked it this morning and it's free. All you have to do is to register. And if you're a business in a bushfire or a drought affected area, so Coffs Harbour is, you're not near a major city, Sydney, Brisbane, etc., then you're eligible to promote on this Facebook group. Now I've done probably about 8 or 9 posts of some of my own things, and it's a slow process, a slow build, but you're getting your name out. You're building your brand, building your awareness. There are people all over Australia and overseas who are looking at the things that you post, okay? So again, don't just put up brown shoes, size 8, upper, leather, upper, etc. Change it to something which is compelling, sell a solution. There's got to be a reason why someone wants to buy that. You've got to tell them, if you've got a solution to a problem, put it out there. That's a great part of marketing. Now, this business is also associated with a new website, e-commerce marketplace called Spend With Us. Now, it's associated with Buy From a Bush Business. You have to apply. There's 3 different packages. So just real quick, they are things like first $200 of sales, no fees. After $200, I think it's about 5%. Then there's a package for just under $100 with lower selling fees. And then there's another one for just under $150, and you get front page on the website. So I put up about 30 items on this, and I'm reasonable at SEO. I'm staggered by the response that has come in from the Spend With Us website. I get more people going to that to look at those products than over on my own website, okay? So they've really got the SEO working well. It's all set up. You just got to follow what's there, and hopefully you'll be surprised as well with the results from that. And then there's a third business, and they have a digital marketing business. You don't have to take up any of their services, but that's on there as well. And so that's why this is quite savvy. And in the current climate, you know what? It's getting really crowded out there in the online space. There's a lot of noise and it's hard to cut through. So these are just a couple of ways that you might be able to cut through, build your business, doesn't matter what sort of business that you're in. And then finally, there is the federal government. There's a number of measures in the federal government budget that's just gone through. Look at those and see how you can use and utilise those in your own business. And finally, oh darn, let's see what's happened here. Finally, all I was going to do was just simply bring up this one, which is free business advice from our sponsor, Business Connect. So we can give you a free personalised service to help you with your business. We look at a whole range of different things. We're there to help you. We're not there to judge you. We want you to be successful. We want you to employ people because that's the way that your business is going to grow. That's the way our region's going to grow. And that's the way the country's going to get back on its feet. So need further help with cash flow, budgeting, business plans, marketing, sales, e-commerce, SEO, social media, government assistance packages, or putting it all together, then give us a call today, tomorrow, either on the phone number, email, or send me a text. Thank you very much.